Today, the market didn't do much of anything, even though the Dow was up a little bit after the hammer type signal that gapped down through the last support level and the 200-day moving average. There was prospects that on a hammer type signal, they could start back up. However, stochastic still heading down. Today's trading, as you can see, was relatively indecisive, a Doji type day. Yesterday, the NASDAQ came down and dibbled around the 200-day moving average in the oversold area. Remember, a gap down Doji at the bottom of a downtrend usually implies you want to start looking for buy signals. However, today's trading once again used the 200-day moving average as support and did another Doji day. This still allows for the candlestick investor to know when to start adding to long positions and covering short positions based upon how the pre-market futures indicate the market is going to open tomorrow. A positive open tells us there's probably at least a bounce back up to the T-line, and then have to see what happens at that level to see whether we did hit a bottom here and it's starting back up, or whether this was just merely a bounce up to the T-line area. The S&P 500 ran into the same analysis where you had a hammer type Doji gap down, not quite back in the oversold area, and it did it off the 200-day moving average. Even though it traded positive today, you can see how indecisive this trading was, another Doji day. However, that still puts the analysis into a situation where we know after a Doji, the trend is usually going to move in the direction of how they open. So looking for positive trading tomorrow on the open would allow us to start buying immediately with the anticipation that the first move would be back up to the T-line and indicating that the 200-day moving average was probably a support area. The patterns have worked well, such as our Frypan bottom when we recommended VERI. Notice the Frypan bottom, notice the bobble breakout at the 200-day moving average, and then notice what it couldn't do ever since that. They couldn't close below the T-line. They actually used the T-line quite often as a support area. Today's positive trading was still the results of coming out of a Frypan bottom and creating a very strong price move. So knowing the results of a Frypan bottom, when it hits a resistance level, we also are aware of the bobble pattern, which is a J-hook pattern that's more defined because you can see where the resistance level was. So knowing that we came out of a Frypan bottom, or produced a Frypan bottom, and now it failed at the first resistance, if they come back up through the 50-day moving average, that's basically your bobble breakout, which is still part of the uptrend coming out of a Frypan bottom, creating the classic pattern, which is a Frypan bottom followed by a J-hook pattern. So investor sentiment tells us that if they come back up through the 50, indicating that the 50 is not going to be a resistance anymore, that it's still confirming our Frypan bottom, that wave 1 and wave 3 could take you all the way back up to the 200-day moving average. But the most rhetorical question is, man, when do I start buying? If you shorted Apple after the gap up Dojis, gap down, and trading below the T-line, it might have been aggravating or scary at times, but there was one underlying factor that would have kept you short during this whole downtrend. You were trading below the T-line. NVIDIA, another good example. There was your Doji bearish confirmation. There was your failure again at the T-line, your failure at the 50. And how did you trade this? Just on one simple factor. You stayed short as long as you didn't see a reversal signal and a close back up above the T-line. And an often asked question is, do candlestick signals and patterns indicate what to do going into earnings? And the answer is, that the candlestick signals and patterns are the accumulative knowledge of everybody buying and selling. So if they're buying going into the earnings or creating a strong buy signal, that means the people in the know are probably buying, knowing exactly what's going on in a company or an earnings report. Today we saw Marvell, after it gapped up and did a doji above the previous day's open on, what is that day? Wednesday. Nope, Tuesday. And then yesterday it gapped up. Notice where it gapped up. They opened it above the previous day's open and did a doji. And what is our simple doji rule? They're going to move it in the direction how they open after a doji. Well, they were doing somewhat of a bullish flutter kicker, and the earnings were decent. It's trading up here after hours. So the probabilities of being in the right direction at the right time is based upon what type of signals and patterns you witness going into an earnings report. That'll be it. We'll see you in the chat rooms.